Hello everyone, I'm your CA Rajavardhan, and in today's session, I'll be helping you analyze and also answer your July 2021 CA Foundation Principles and Practice of Accounting paper. But before we get into the core part of our session, I'm going to quickly run you through an amazing news that I have for all of you. Starting 4th of August, that's in another 2 days, we are running an amazing batch called as Excel with Issues batch. This batch is exclusively for all those aspirants who are writing their CA intermediate examination in November 2021 and onwards. So all of you people who have written your examination this July, don't wait for the results and start your preparation with Yashas Academy in this Excel with Yashas batch, because your foundation results will be way too late to start your CA intermediate examination preparation. So this batch will let you get access to the India's topmost educators, starting with Vijay Raja sir for tax and law, followed with Ravikant Miriala sir for accounting standards, Mayur Nahata sir along with me C. Rajvardhan will be handling accountancy, and Dhananjay Bave sir will be handling costing paper. So the group 2 batch has already been running, so you can start with our group 2 or group 1 preparations as your preparation requirement is. The batch will consist of live interactive classes, unlimited recordings definitely being available. You get access to multiple educators. The syllabus will be taught in line with ICA syllabus, and regular practice mock tests and examinations will be conducted. So what are you waiting for? Please take your subscription today. Download Unacademy app on your Play Store from your mobile and choose CA intermediate subscription or iconic subscription. The price starts as low as 1125 or 2583 when it comes to iconic subscription. You can take CA foundation and CA intermediate combo subscription also, just in case your CA foundation results don't go really great. We are launching quite a few crash courses and quick revisions and marathons for CA foundation also in the coming days. So the beauty of the subscription at this point of time is, if you take the subscription for 12 months, you get 2 months subscription free, and if you take the subscription for 24 months, you get 3 months subscription free. And whatever subscription you're taking, please don't forget to use the code YASHAS, which will give you an discount of 10% on the price that you see. So take your subscription today and join us in your journey of CA. So let's get started. So the paper that we're discussing is what was tested in July 2021 examination. So I've downloaded this question paper from ICAI's website, which you can always do. Go to www.icai.org, go to BOS knowledge portal under the students column, CA foundation, and there you go for question papers and you download. If not, however, the link to this paper as well as the solution that I'm discussing, I'll drop it in the description so that you can get access to it. So as usual, question number 1 is compulsory and you're supposed to answer 4 out of the remaining 5 questions, each question carrying 20 marks. So I thought of discussing the paper and not just an analysis of the same. So it took a little while for me to come about with answers. And you can see the time as to what time is it when I'm recording this particular video. And definitely I couldn't have started the video by good night, so I didn't. Maybe at the end of the session, I'll definitely tell you all a good night. Yeah. So the first question was basically you need to answer true or false to the statements and also state the reason why is it true or why is it false. Yeah. So the first statement goes like, goods sold on approval or return basis are not recorded as credit sales initially when they're sent out. So this statement is false, because whenever the goods are sent on return or approval basis, firstly we should record it as sales, and later at the end of the period, if the goods are not returned and the time still exists, then we'd have to reverse the sales entry and also include such goods in the stock. Let me show you the answer. Have a look at it. So false. What is the answer? Goods sent on return or approval basis are initially recorded as sales when it is sent and later revised on the year end if goods are not accepted nor returned and time to return has still not lapsed. Let's quickly go to our next question. Yeah, second one. The company is not allowed to issue shares at discount to public in general. The answer is true, because Section 53 of Companies Act 2013 specifically prohibits issue of shares at discount. However, the exceptions are given in Section 54, that is employee stock option rights, or however reissue of forfeited shares is possible at discount, but generally to public, issue of shares at discount is not possible. Have a look. True. As per Section 53 of Companies Act 2013, the company is prohibited to issue shares at discount other than by way of Section 54. Let's go to the third question. So third question what we have is, warehouse rent paid for storage. If you have paid any warehouse rent for the purpose of storage of finished inventory, it should be included in the stock. No. inclusions in the cost of the inventory is only such amount which is incurred till the time the goods reach the godown. Once the goods reach the godown, any other expenditure incurred is indirect in nature and it will not be included in the cost. So that is what I've discussed over here as well. False. According to accounting standard 2 valuation of inventories, the cost of inventory only includes the expense incurred till the time the goods reach the godown. Expenses incurred after the goods reach the godown are indirect in nature and would not be included in the cost of inventory. The fourth one is a person holding preference shares of a company cannot hold equity shares of the company. Frankly speaking, there is no such restriction in Companies Act. If I hold preference share of a company, I can also hold equity share. So a preference shareholder can also be an equity shareholder in his capacity. That's the answer. There are no such provisions in Companies Act as far as I know, and which restrict from preference shareholder to equity shareholder. All these answers are not issued by ICAI. These are suggested answers by me. I expect these to be the answer. If there is any fair amount of difference between the answer that I quote here and the ICS publications, I will be more than happy to accept it. But as far as I'm considered, these are the answers. So, yep. So, I've been doing it for quite some time now, writing the answers before the suggested answers are issued by ICA. Not really come across a situation where I was in trouble because of my answer being very different from ICA's answer. So, you guys can trust me on this note. Yes. Let's get going to the next question. Yep. Business of partnership comes to an end at the death of a partner. Business of a partnership comes to an end on death of a partner if the partnership has only two people and there is no one who's been joined in, or it's a very rare circumstance that it happens. Usually death of a partner will not lead to dissolution. So the answer is false. Business of partnership may come to an end in case of death. It may, but there is no condition that it has to. Yeah, when there are only two partners, definitely it will happen. Otherwise it would lead to reconstitution of the partnership. Last one, cash book is a subsidiary book as well as a principal book. Answer is absolutely yes. Cash book is equal to cash account. Unlike purchase book is not equal to purchase account, sales book is not equal to sales account, because purchase book will include only credit purchases and purchase account will include credit as well as cash purchases. Same applies to sales book. However, when it comes to cash book, there is no distinction between cash book and cash account. Both are same. Both are same. So it's a primary book of entry, also principal book of entry. In fact, we use these words also reversibly. Cash book and cash account. There is no difference. It is primary book as well as principal book. Principal book means ledger. Primary book means journal or subsidiary book. So the answer is true. Unlike other books, cash book is primary book as well as principal book. Let's quickly get into question number 1B. This is one of my favorite topics. Usually in the class also I do stress saying that this is a part where examiner likes this part too much and they ask quite too many questions. And I usually start discussion with regard to car, bike, building if you come across the classes anytime soon. Yeah. So discuss the basic considerations in distinguishing capital and revenue expenditure. So whenever an expenditure is incurred, how do you determine whether such expenditure is capital in nature or revenue in nature? Yeah, as we've discussed in the class, usually the considerations are nature of business, the purpose for which this expenditure is incurred, the materiality, you remember, materiality of the expenditure, and recoverability of the expense. We discussed it something with regard to some expense which will be incurred again and again. Pen, yeah, or revenue generation capability. Same pen if it is used by Tipu Sultan, if you remember the example. Yep, and the nature of the business we discuss car, building, Ratan Tata or somebody else, or purpose. If Rohit Shetty buys a car, or if I buy a car, Rohit Shetty buys in an action scene, what will it be? And then materiality and everything. Yeah, pen. I bought a pen of 1 lakh, I lose, I cry. I bought a pen of 10 rupees, I lose, I won't cry. That's the materiality concept. Yeah. So not a difficult question, very easy one all again. So let's go to question number 1C. 1C is again part of our mandatory question. This was from depreciation chapter. There was one machine which was bought on 1st of April 2020 and it was bought for 28,54,000. Out of this, plant having book value of 2,16,000 as on 1st of April 2020 was sold. So what I do is I split my machinery 22,54,000 into two parts. Asset which is retained till then, asset which is sold. Asset which is sold is 2,16,000. This is given in the question. So what is retained is 22,54,000 minus 2,16,000. That's what I've done here. What you get is 20,38,000. And further, this sale is happening on 1st of July for 82,000. So what it is till 1st of July. Starting from April till 1st of July is technically how many months? It's April, May, June, 3 months. Because 1st of July, I won't count July. 3 months is what you're going to use this asset for. This is retained, so this will be depreciated for 12 months. Next in, we have two more purchases. On the same date, meaning 1st of July, another new plant was purchased for 4,58,000 and 22,000 was spent on its erection. Any expense incurred on installation of a machinery should be included in the cost. So I do 4,58,000 plus 22, 4,80,000. That's the price at which I'll record my asset which is bought on 1st July. And it is bought on 1st July. So it will be used for July, August, September, October, November, December, January, February, March. 5 in the brain, 4 in the hand. After 5, 6, 7, 8, 9. 9 months depreciation has to be completed for this 4,80,000. And we have another purchase. On 1st of November 2020, a new machine was purchased for rupees 5,60,000. On 1st of November 2020, 5,60,000 machine number 3. When you buy it on 1st of November, it will be used for November, December, January, February, March. 5 months, I write 5 year. For 20,38,000, I compute 12 months depreciation. For 2,16,000, 3 months depreciation. For 4,80,000, 9 months depreciation. And for 5,60,000, 5 months depreciation. Depreciation rate is given to us in the question as it is 15%. So at 15% when I compute, I'll arrive at these figures. You can cross check this with your calculator once you can. But I've however computed on Excel sheet and it can't go wrong. Yes, so that's with respect to 1C. As far as my approach is concerned, as far as I am concerned, I would say question number 1C was a giveaway question. There was nothing difficult, nothing tricky, nothing lengthy about it either. So easily crackable, 20 marks pocketed without any difficulty, without shedding one drop of tear from your eyes. You could have pocketed the 20 marks. Next question was a question wherein basically they required us to do rectification. Very good. Yeah, Mr. Ratan was unable to agree the trial balance last year. So the moment they use this last year word here, this is a big hint which tells us that rectification of the errors is happening at stage 3. That is after preparation of final accounts. In spite of doing problems, students always, when I ask what is your concern, they come up with this issue saying that, sir, after all the problems also still I doubt if I'll be able to make out whether the question is before final accounts or after final accounts. Quite obvious. If you just get the language right from the question, you would be very easily able to make out whether it is after final accounts or before. Here they use the word last year, so it's obviously what? It's obviously errors identified after preparation of final accounts. Yes. And difference to the P&L account. What have they done? Whatever the difference was there, no suspense account, they have transferred it to P&L. So this is one error which we need to rectify, which usually majority of the students do forget or do ignore, or by mistake they forget this part. So this has to be reversed. I'll show you the entry. I've done it. So next year he appointed a chartered accountant. Wow, finally learned his lesson. Who examined the old books and he followed found the following mistakes. So each of these errors has to be rectified. First one, purchase of a scooter was debited to conveyance account. Conveyance is an expense. Purchase of scooter is an asset. So an asset has been written to expense. So principal error. So scooter was not debited. Debit it now. Conveyance was wrongly debited. You would have to credit it now. The rectification entry should be scooter to conveyance. However, conveyance account being a nominal account of previous year, we cannot be using it in the rectification at stage 3. We'll replace that conveyance account with P&L adjustment account. We'll replace that account with P&L adjustment account. Have a look. Yeah, vehicle account or scooter account debit to P&L adjustment. This P&L adjustment account is basically replacing my conveyance account. Amount is 27,000. Sorry. Yeah, 27. Because 30,000 is the value, 10% depreciated. If you want, you can what you can do is you can record it at 30 and then pass another depreciation entry. Depreciation account debit to vehicle account. Yeah. So vehicle 30 debit, 3 credit. Vehicle will become 27. Again, you can't debit depreciation there. Why? This depreciation pertains to previous year. So in last year, again, you would have to replace that depreciation with P&L adjustment. So frankly speaking, if you write two entries, it would be like vehicle to P&L adjustment 30, P&L adjustment to vehicle 3. Instead, what I've done, I've straight away written vehicle to P&L adjustment 27. A similar adjustment when we did in the class, if you remember, I made you write two separate entries. I first made you write vehicle to P&L adjustment. Then I made you write depreciation to vehicle and then scratch it depreciation and then made you write P&L adjustment. However, in the examination, you need not show such amount of clarity. You can straight away write one entry. This would do the job. Sir, no sir, you taught us in that way. We ended up writing in that way. Would we lose marks? The answer to such a question is no, you would not lose marks. You still get full marks. Yes, next. Purchase account was overcast by 1 lakh. Decrease it. Credit purchase account, debit suspense. However, credit purchase will be replaced with P&L adjustment. Why? You can't basically be using nominal account in rectification after final accounts. Then we have the third one. Credit purchase of goods from Mr. X for rupees 20,000 was entered as sale. By mistake, you entered as sale. Reverse the sale. You are supposed to record it as purchase. You have not recorded. Record it now. So the rectification entry will be purchase account debit, sale account debit to X account. However, purchase account, sale account being nominal accounts cannot be used in the rectification at stage 3. So I'll replace my purchase as well as sale with P and L adjustment account, and X account will be credited with double the amount. Double the amount. Done. Next, fourth one. A receipt of cash from Mr. Anand was posted to the account of Mr. Bhaskar. Achacha. Mr. Anand gave money. By mistake, you wrote it to Bhaskar. What will you do now? Bhaskar account was wrongly credited. Had he received wrong credit? Debit Bhaskar and give the right credit to Anand. Bhaskar to Anand is the entry. And in this Bhaskar to Anand entry, we will not be using P&L adjustment anywhere. Why? Bhaskar account as well as Anand account, both are not nominal accounts. They are personal accounts, real personal accounts. So they need not be replaced with P&L adjustment. Then we have with us number 5. Receipt of cash from Mr. Chandu was posted to the debit of his account. Mr. Chandu gave cash. We should give him credit, isn't it? But we wrongly debited him. So firstly, the credit was not given. So we should credit. Wrong debit was given. To reverse that again credit. So we should give double credit to Mr. Chandu now. So that will be amount of 5,000 into 10,000. Have a look. We will give double credit to Chandu 10,000 and debit will be suspense account. Then we have with us rupees 5,000 due by Mr. Mahesh was omitted to be taken on trial balance. Mr. Mr. Ramesh. Okay, 5,000. Okay, Ramesh was supposed to pay us rupees 5,000, which was omitted. That's a trade receivable or a debtor not recorded. Record now, debit it and create suspense account. So I'll write trade receivables to suspense. If you want, you can write instead of trade receivables, you can mention the name Mr. Ramesh. But I prefer to write trade receivable. If you have written debtor account debit to suspense, or if you written Ramesh account debit to suspense, or if you written trade receivables debit to suspense, all the three answers are right and you'll still be awarded full marks. Sir, why did you use trade receivables? I'm just trying to match the language what ICI uses in its material. So I want to keep my answers as close to the suggested answers that will be issued by ICI very soon. So I use the word trade receivables. I am not like hi-fi and all. I use the word trade receivables because I think ICI will use this word in their suggested answers. Come on. Let us go to next one. Sale of goods to Mr. Ram rupees 20,000 was omitted to be recorded. Record it now. Ram to sales. However, we cannot credit sales because this is rectification at stage 3. We'll replace sales account with P&L adjustment. We'll write, where is it? Trade receivables to P&L adjustment. Again, I wrote trade receivables instead of place of RAM because I told you language, ICI, posh, like behave with like little more sophisticated language to live up to the standards given by ICI. Yep. Then we have with this amount of rupees 23,950 of purchases was wrongly posted at 25,930. So you have wrongly increased your purchases. So you have to decrease it. Credit purchase by difference of the amount. So credit purchases will not be, you cannot credit it. Where is it? Where is it? This part. You cannot. Where is it? This was RAM 20,000 over. 20,000 over. So this is the one. Oh, it was right. Okay, amount of rupees 23,950 of purchases was wrongly posted as 25,930. So the error is not in the purchase account. Purchase account it's correctly there. It is wrongly posted to the creditor account. So creditor account has been wrongly increased. We have to decrease it. So I'll debit my trade payable. That is my creditor account and suspense account will be credited. 1,980 is the difference between these two amount. Yeah. So this one part where now in the heat of the moment how I got it wrong, assuming that it is error in purchase. I'm trying to fill up the entire video in the span of an hour because it's already 125. I want to finish off this and then go to bed little early. So if you are in such a hurry in the examination hall, there is a very good probability that you might mess up, my dear friend. Because if I can do an error, you can do an error. But when I wrote the answers, it was around 9 o'clock, 10 o'clock. It was like peaceful. Just had my dinner and then I wrote it. So yeah, the error is in trade payable account, not in the purchase account. Then that's it. So entire suspense account amount, whatever was there, it was wrongly transferred to P&L account. They've given here. Difference was wrongly transferred to P&L account. Now we need to rectify that. What do we do? Now we need to reverse that entry. Have a look. So I take the total of all the suspense entries. I'll basically write P&L adjustment to suspense. Why? I can't be writing P&L account again. Yeah. And then that P&L adjustment balance, whatever is there, will go to capital account. Yeah. You might say, sir, that suspense balance, you wrote it to P&L adjustment. From there, you are transferring to capital. If it was there in P&L, wouldn't it have gone to capital? That is not how you write it. The way they treated it last year is wrong. After rectifying all the errors, now we've revised the suspense, and then whatever is relating to capital profit, I mean say whatever is relating to profit of last year adjustment, that will transfer to my capital account, Ratan's capital account. And they've asked us to further prepare suspense account and P&L adjustment. I just have to pick those entries and then post them. I've done this ledger. I'll give a PDF copy of this Excel sheet in the description to this video. You can download it from there. Yeah, so I hope I don't have to spend much time on discussing the ledger account. Let me quickly run you to next question. Question number 2b. Question number 2b is about bank reconciliation statement. Very easy question, but it's little unique because usually students expect starting point to be cash book, but this question was little offbeat because the starting point is passbook, and moreover they told debit balance as per passbook, that is overdraft balance. Usually what people do is they usually do this add less scenario, and then whatever is add will become less, whatever is less will become add, because it is overdraft. But if you attended my lectures, I've told you very clearly that whenever we have an overdraft balance, just take that overdraft balance as negative. Rest of the items you keep it add only. Just because of that one item, don't change the entire answer. Let that be negative and let other items fall in place. Sir, if we write it this way, would we get marks in the exam? I've been teaching this for more than half a decade now. A lot of students have done it this way in examination. I've not just cleared foundation, but I've also cleared CA final level. They're all chartered accountants now. So don't worry. Writing this way of answer is accepted by ICI. You can definitely write it. Now, what is given in the question? Debit balance as per passbook. Opening balance is 3,500 negative. I have written that. A check amounting to rupees 2,500 deposited on 15th of March, but the same was returned by the bank on 24th March, for which no entry was passed in cash book. You deposited a check in the bank, so your cash book increased. The passbook didn't increase because the banker returned the check, but no entry was made in the cash book with regard to the return. So cash book has increased, passbook has not. Can you see the P? No. In order to see the P, either you'd have to P up or you'd have to C down. What's in your control? C. Oh, sorry. What's in your control? P. What do we do? Add. So it's an add item. 2,500 has to be added. I've written 2,500 as add item. Next item. During March, two bills amounting to rupees 2,500 and 500 were collected by the bank, but no entry was made in the cash book. My banker has directly collected 3,000 rupees on my behalf, because of which my passbook balance has increased and cash book balance has not increased. Where are we making changes? In the passbook. What do? I would reduce my passbook balance to meet up with the cash book balance. So I decrease. It's a less item. Have a look. 3,000 rupees is a less item. Then a bill of rupees 5,000 due from Mr. Balaji, previously discounted for rupees 4,800, was dishonored. The bank debited the account, but no entry was made in the cash book. So previously the bill was discounted by you, but the person whose name was written on the bill dishonored that bill. So what really happened? So your passbook balance went down because banker took money away from your bank account. How much? 5,000. But your cash book balance has not decreased. You're making changes in passbook. I would add not 4,800 but entire 5,000. So have a look. Add entire 5,000 rupees. Got it? Next, we have for number 5. A check of rupees 1,500 was debited twice in the cash book. Debit will increase the cash book balance. So you debited a check once, 1,500 cash book increase, 1,500 passbook increase. But you debited it twice in the cash book, maybe because you strongly believed in double entry system. So you increased your cash book by 1,500 once again, with which the passbook has not increased. Frankly speaking, both have increased by 1,500 once. You increase the cash book further by 1,500. There is a difference of 1,500. Where are we making changes? Passbook. What will I do? Add 1,500. That, my friends, would close this part. That's it. There is nothing else left in the question. Take the total of adds, take the total of less items. What you end up getting is positive 2,500, which means balance as per cash book. If this was negative 2,500, it means it is overdraft balance as per cash book. What I strongly believe in BRS chapter C is keep the numbers negative, not the words. Instead of writing overdraft balance as per passbook 3,500, I would recommend you to write balance as per cash book minus 3,500. So keep the numbers negative. It is easy to compute and not the words. So let's go to question number 2C. This question was on adjusted selling price. We've done exactly similar question in the class. Yeah, not at all different. Just the figures were different. Yeah, purchase price. This is at cost is 5 lakh. Sales 2 lakhs, 7,50,000. Opening stock is nil and closing stock is 1 lakh. So these two are at selling price. This is at cost price. So what do? Opening stock is not there. So entire sales is made out of purchases. And from purchases, after some items are sold, what is remaining is closing stock. So if you add sales plus closing stock, 1 lakh plus 7 lakh 50, what you get is 8 lakh 50. This 8 lakh 50 is the purchases at selling price. So what is bought for 5 lakh can be sold for 8 lakh 50. That is profit of 3 lakh 50. 3 lakh 50,000 profit on 8 lakh 50. You get the profit percentage. Remove that profit margin on this closing stock at selling price. You will end up getting closing stock at cost price. Let me show you the answer. Have a look. So 8 lakh 50 is the total purchases at selling price, and then 5 lakh rupees is the cost price of purchases. Selling price of purchases is 8 lakh 50. So 3 lakh 50 is the profit that you earn if you sell entire goods at 8 lakh 50. That gives a margin of 41.176%. If you eliminate this from the sales value of closing stock, you will get your closing stock at cost price. Yeah, this is adjusted selling price. Usually in the class, we do this cross multiplication. इतने में इतना तो इतने में कितना, if it is this much for this much, how much for this much, ఇంతకి ఇంత అయితే ఇంతకి ఎంత, cross multiplication. అక్క కిత్ల జలర్తక కిత్లే, ఈతకి ఈత అండ ఈతకి ఈత. You remember? ಇವಳಕ್ಕೋ ಇವಳೋನ ಇವಳಕ್ಕೋ ಇವಳೋ, cross multiplication. Same thing if you do, you'll end up getting the answer. If you want, you can go look back into your material. The presentation is little different in the class notes because I write. Because it is Excel, I've done it in a little sophisticated way, which you can expect in ICI's suggested answer. They would present it this way. They would not do that cross multiplication thing. Yeah. Next one is your favorite, 3A. Average due date. Ram lent 1,50,000 to Deepak. Is supposed to repay it on dates 1st of January, 1st of January, 1st of January, 1st of January. Happy New Year 2017, 2018, 2019, 2020 and 2021. So there are several dates. The beauty is you can easily take years here, not months. Calculation would be completely running through years. So the base date will be 10,000, 1st of January 2017. Interest is 12%. They've given a separate date of settling. They've given settling. Okay. Let's see this. Yep. Okay, let's quickly take 10, 20, 30, 40, 50. 10, 20, 30, 40, 50. Base year will become this one. So I'll take 0, 1, 2, 3, 4. Then product. Then you get total product, total amount. Average due date is computed as base date plus total product divided by total amounts. Just solve this. You get 2.666. Don't consider it as months. Remember, it is years. Why? Here you took years, no? If you take months here, what you get here will be months. If you take days here, what you get here will be days. You took years here, 1 year, 2 years, 3 years, 4 years. This will be 2.66666666666 years. 2 years is 24 months. 0.66 years means do 0.666 into 12. You end up getting 8. So 24 plus 8 is 32 months. From 1st of January, if you count 32 months, you will end up getting 1st of September. That is your average due date. Meaning, if you settle the entire money, how much that 1,50,000 on 1st of September, you need not pay any interest. However, what has happened? You are required to determine the average rate for settling all the single payment. That's it. Lent on 1st of July. Okay, that's it, guys. That's it. Yeah. Then we have another question coming up. Question number 3B for us. ABC Limited supplied goods on sale or return basis to customers. Okay. Goods are returned within 15 days from the date of dispatch, failing to which it is stated as sale. So the period within which the customer can return the goods or your debtor can return the goods is 15 days. Within 15 days, either he has to return or he has to agree. On the 16th day, it becomes like he has accepted it. He can't return. He should accept it and then pay money. No option to return. Okay. The books of ABC Limited are closed on 31st of March. Following particulars are given. So entire information is given. They are required to prepare a sale or return day book and ledger. Simple question. Very simple question. Have a look. 10th of March 2021. I'll write 10th of March 2021. PQR. 25,000 sent. No information till 31st of March. If there is no information from 10th, 15 days is 25th. On 25th, it is assumed to be accepted. So I'll write 25th, it is sold. 25th, it is sold. Why? 15 days may didn't return. Next, PQR on 12/3/2021, 15,000. DEF 12th of March, 15,000. What has happened? Returned on 16th March. I'll write in the returned column 15,000. Then we have GHI 15th of March, 40,000. GHI 15th of March, 40,000. What has happened? Goods worth 80,000, 8,000 are returned. 8,000 I'll write in the return column. Yeah. When did we send 15th? 15 days time comes to 30th of March. No information given. 8,000 is accepted. 8,000 is returned. Balance 32,000 assumed to be sold. Then we have again DEF 20th of March, 10,000. I'll write DEF 20th of March 10,000. Then what has happened? Goods have been retained on 24th of March. 20th, say 15 days, we have time till April 5th, April 4th, but on 24th only he has accepted it. So I'll write in the what to say sold column 24th of March. Then let's go to PQR on 25th of March. 22,000 is sent. Goods were returned on 28th. 25th sent. 15 days time means Bejan time is there. But on 20th only he accepted. On 28th only I write it in the sales column. Sold. Yep. Then we have XYZ 30th of March. XYZ 30th of March. 35,000 rupees. 35,000 rupees. No information available till 31st of March 2021. 30th it is. There is still a lot of time. So it will not be considered as sale. It will be written in the balance column 35,000. Now this entire thing comes to 1,47,000. It is like goods sent. So write on the credit side 1,47,000. Out of which how much is sold? 89. How much is returned? 23. Balance carried on will become 35. That is goods sent on sale or return basis account. So a very simple problem, very easy problem. In fact, trust me, this question for 5 marks can be completed in about 4 minutes. Yeah, very easy to do, very less time consuming, and there's no difficulty in this part also so far. Yeah, so this one is a little time taking one and little tricky one. Usually people find this chapter little tricky, right? Consignment. Let's get started. Next one, 3C. Okay, consigned 700 boxes of medicines to Raja Medicals at an invoice price of 1,68,000. This question is on invoice price, so we'd have to remove the load. Yeah, 1,68,700 box. 1,68,700 box. Then the load is 20% above the actual price, actual cost price. So 20% over and above it. So this price is 120, and I would have to remove load. So load removal, I would have thought you would have to do it at 20 by 120. That's a small topic. Just remember that part as 20 by 120 is what we should do. Then insurance and freight is incurred is 14,000. This consignor's expense. I'll write insurance and freight 14,000. Expense increasing in consignment account debit side. Then in the course 50 boxes were lost in the transit. This is abnormal loss, not normal loss. It is not normal. You sent 700 box, 50 boxes gayab. How is it normal? It is completely abnormal. You would have to compute. So 1,68,000 is invoice price for 700 boxes. So we'll do 1,68,000 into 50 by 700. Remove the 20% load on the same. And this 14,000 may also 50 by 700 we should do proportionate expense. That will be the value of our goods lost in transit. I've done a working note in detail. Have a look. 1,68,000 into 50 by 700. This is the cost. I'll remove the load. 12,000 into 20 by 120. And what to say? Basically, cost of goods lost in transit comes to 10,000. I'll add proportionate expenses, that is 14,000 into 50 by 700. Consignor's expense. That gives me cost of the goods lost as 11,000. It is decrease in the value of the consignment stock. I'll write on the credit side 11,000 rupees. I hope you guys don't have a trouble with it. Yeah. And then on this goods sent on consignment 1,68,000, load is removed here 28,000. Yes. Next, what do you have? Consignee took the delivery of the remaining boxes. That is 700 minus 50, 650 boxes, and incurred 9,750 for carriage. 9,750 I'll write here. Yeah, 9,750 I'll write here. This is non-recurring expenses because this expense is incurred till the time the goods reach consignee's go down. Once the goods reach consignee's go down, any expenditure incurred will become recurring expenditure or selling expenditure, which will not be included in computation of value of closing stock. This 9,750 will be considered in computation of closing stock. Next, what happened? Consignee sold 500 boxes for 1,60,000. 1,60,000, 500 sold. 700 sent, 50 lost, 650. 650 में 500 sold. So 150 boxes will be our closing stock. I have done that here. Have a look. So 700 minus 50 minus 500. 150 boxes will be there. So the cost of the boxes is 1,68,000. So I write 1,68,000 into 150 by 700 for what do you say? The invoice value of the goods. Load will be removed separately. Load I would remove separately. Stock reserve on the consignment account debit side. Remember that. Then what we have after that is proportionate expense of the consignor. 14,000 whatever is incurred, and consignee's expense, only non-recurring expense has to be considered because recurring expenses, that is selling expenses, will not be included in the cost of the consignment stock. Yes, I hope you get that part. So with that, what I do, I computed my stock reserve, I computed my balance carried on, and this is removed. Now what is remaining is we have to identify our commission. That information is given in the next line. 6,000 is selling expense. I write that 6,000 selling expense. Totally, we're supposed to reimburse 15,750 to our consignee. Then consignee is entitled to commission at 6% on gross sales. On 1 lakh 60, if I compute 6%, then I'll arrive at 9,600. That is my commission. I'll find my profit as balance in figure. That's it. This is it with respect to the consignment question. A quite easy one. You can see the detailed working in the Excel sheet, what I'll share it to you in the PDF a little later. Yeah, don't take me wrong, is how is this guy going too fast, so fast, so fast. I'm running it fast because it's little better than a simple analysis of saying which question comes from which chapter, but it's not going to be a detailed one because such a detailed one will come to about like 2 hours video and you guys might not watch it. Yeah, just adhering to the limits of time and keeping it in short for about an hour. So one, two, three questions done. I'll take a short 2 second break to drink water and start with question number 4. Hmm. Question number 4 is a question from final accounts. Beautiful question. So nothing much very interesting in this part. So there are a lot of expenses given. I don't want to deal with this question in detail. So just put you go on posting. There are some outstanding expenses which are supposed to be included based on accrual concept, and depreciation we were supposed to compute it separately. And bank account was missing in this question. Bank account was supposed to be prepared. This is what took a lot of time in this question. And once you do that bank account, identify the balancing figure that comes in your closing balance sheet as bank account, and rest every other information was given. Question looked quite bulky, but it was not, and opening stock was also not there in the question. We find gross profit as balance and figure as other items were given. That gross profit ends up here, net profit balance and figure here, added to the capital, and that's how we end up. So it's a beautiful one. There are few payment outstanding expenses that you know, outstanding prepaid adjustment. If you know to do that, then this question was a easy cakewalk. Yes, it was time consuming, but it was easy. Then we have question number 4b, which was a NPO question where receipts and payment account was given to us, and what we were supposed to do was prepare income and expenditure and balance sheet. And subscriptions was a very beautiful adjustment. I've done that in detail. So if you can observe in my subscription, I don't usually what to say suggest students to prepare a statement where you do add or less, because at the end of the day you are going to become an accountant, chartered accountant, and you should know, you should prefer an account over a statement at the end of the day. And the subject name is also not what is it, principles and practice of statements. It is principles and practice of accounting, isn't it? Yeah, unless it is a chapter of BRS or valuation of inventory where you have to prepare a statement. I would strongly recommend students to become stronger debit and credit, no accrual, outstanding, pre-received, prepaid concept, and do everything in the form of a ledger. So we have subscription due, that is receivable, 15 and 12 being a set, 15 opening, 22 closing, 15 debit, 22 credit. See, 15 debit, 22 credit. Next up, we have subscription received in advance. It is a pre-received income, which is a liability. Opening balance credit, closing balance debit. 12 credit, 7 debit. Have a look, 12 credit, 7 debit. And they've given another information with regard to how much is received is given here. In the receipt side, they've given subscription received to be 5 lakhs. If I put that 5 lakh received, I'll identify my income and expenditure 5 lakh 12,000 very easily. So you need not remember that when to add, when to subtract. Sometimes opening outstanding will be added, sometimes it will be deducted, because sometimes you start with income and expenditure balance, sometimes you start with receipts and payment balance. So instead drop and ledger, there will be 2 opening balances, 2 closing balances, one receipts and payment, one income and expenditure account. You would have for some items, what is not there is balance and figure, as sweet and simple as that. And then creditors for medicine is there. There also the closing balance of creditors is not aware. They've given us how much medicines, how much creditors were outstanding in the beginning, how much is at the ending, how much was purchased is available in receipts and payment account. You would be requested to find the closing creditors, which would go to your balance sheet. Then equipment, they've given opening balance, closing balance, and in receipts and payment, they've given you how much of equipment was purchased. You find the difference as depreciation. So that's another beautiful adjustment. Here also, I wouldn't recommend you to do any add less. I would recommend you to do a ledger. It will take lesser time. You can't go wrong. And this is our strength, no? Debit, credit, opening, closing balances. Yes. Building also opening 5 lakh, closing 4 lakh 80. So building cannot get down and then go walk away, no? Like I won't talk to you. No. That part of difference is depreciation. And you close transfer that. That's it. So if majority of the students would have found it difficult at subscription account, if you would have cracked subscription, nothing else was difficult. So it's very easy to identify this. Another part which was tricky is identifying the cost of medicines consumed. It is simple. Opening plus purchase minus closing will give you the medicine consumed. You will write the consumed part in the expenditure side. Yeah. because we don't really prepare trading account. No, because non-profit organizations are also called as non-trading concerns. That's the part. And rest everything was quite simple. And charity receipts 1,25,000 on the receipt side, income side, and payments can be written on the expenditure side. However, ICI usually presents it as a deduction on the receipt side only, on the income. Net income has to be reported. So even I have presented it the same way. So other than that, this AMA society question was quite easy. Yes, time taking, but you can't expect everything to be a cakewalk, no. PRS question, valuation of inventory question, those were like this easy ones, but this was a little time taking. I totally agree. Question number 4, both the parts were time taking. I think if few people would have been really smart, they would have skipped question number 4 and done the rest of it. So not a bad idea, but question number 4 was not much difficult. It was something which is doable. So on a personal note, if I am writing exam, I don't want to miss on question number 4. I love doing that final accounts and NPO parts. However, let's go to question number 5A. 5A was with regard to purchase book. Very rarely they do ask questions on purchase book, sales book and everything. But again, if they do ask, it's quite simple one. You just need to write the credit purchases. So from Red and Company, 10 pairs of black shoes at 800, 5 pairs of brown shoes at 900. So 10 into 800, 5 into 900 minus 10% and you're done. 10 into 800, 5 into 900 minus 10% and you're done. That's it. As simple as that. This is like lottery, guys. Lottery. 5 marks, less than 2 minutes. Yeah. Second part, purchased computer from Messrs. Rahul Enterprise. This is asset purchased. It is good if you don't read this, because if you write this in your purchase book, you will end up losing marks. Yeah, 5 marks means you get 3 marks. You write only this much, you get 5. You write this, you get 3. Oh, sir, if you write extra, will we lose marks? Yes, because this is asset purchased and should not be written in purchase book. Then let's go to 5B. Okay, there is one more purchase. This purchase also should not be written because this is purchase for cash. Cash purchases are not recorded in purchase book. Only goods purchased on credit will be recorded in purchase book. If it is assets purchased or if it is goods purchased for cash, it will not be recorded in purchase book. A very simple question. Then they gave this choice in the fifth question this time, wherein they gave a question on JLP ledger or they gave it on certain items and we need to say whether it is provision or reserve. So you had a choice, but I prepared the answer for both of them. In this question, they asked you to prepare JLP account under showing the JLP at surrender value. This is where they've treated JLP as an asset. So the premium paid will first be recorded. You will write JLP account debit to cash. Later, you will show the JLP in the balance sheet as surrender value. If the premium paid and surrender value are different, the differential portion will be written off by transferring to P&L. And during the entire JLP period, if the partner dies, you receive the surrender, you receive the policy amount. If the partner retires, you receive the surrender value. So that's with regard to this question. So they paid 3,000 rupees. Sorry, took a policy for 50,000, paid 3,000 annually. So every year I'll write 3,000 to bank, 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 3,000 to bank. Every year we write 3,000 rupees. First year the surrender value is nil. Surrender value is nil first year. So entire amount is to be written off. So I transfer entire 3,000 to my P&L account. Second year surrender value is 900. So 900 I'll write first. Balance carried on. This would appear in balance sheet. 2,100 is to be written off. Third year mein 2,000 is to be shown. So 3,000 plus this 900 brought down. 3,900 में से 2,000 is surrender value. So 1,900 is expense written off. Then for next year 3,600. So this 2,000 brought down here. Further 3,000 paid. 5,000. Out of that 3,600 is balance. So 1,400 is written off. I bring this 3,600 here. And on this day the partner retired. Rama retired. So you receive 3,600 completely. That is the end of our joint life policy account. So usually people find this little difficult. We have discussed this same very concept even in our quick revision as well as the last day marathon that I personally did to help all of you people. So if you would have attended either of it, you wouldn't have found this difficult. Yeah, almost running low on battery. No, not my personal battery, the laptop battery. I hope we'll be able to finish it by then. We will be. So they've given these items and we need to say whether it needs to be transferred to provisions or transferred reserves or neither. First one, liability for income tax, provision. Retained profit, reserve. Proposed dividend, neither provision nor reserve. It is appropriation of reserves. So increase in provision for doubtful debts. Oh, answers are here. Answers are here. I've actually written the answer. Liability provision, tax, income tax liability provision, retained profit reserve, proposed dividend, neither provision nor reserve. Why? It is appropriation of income. If you increase your provision for doubtful debts, it is creation of provision. If you write off bad debts, it is expense, which will decrease the profit. It is neither provision nor reserve because it is actual expense. It is not like you keeping money aside for a future expense for a known or an unknown cause. Yeah. Then we had question number 5C, which is on partnership. Ram, Lakshman, Bharat. Yeah. Ramayan or partners that in the event and they had agreed that in the event of death survivors would have to purchase their share in the, okay, they didn't ask the question on admission or retirement, this was on death. So goodwill is to be valued at 3 years purchase of 4 years profits. They have given 4 years profits here. Add all the 4 divided by 3, you will get the goodwill of the firm. So then they've told outstanding amount has to be paid to the deceased partner in 4 equal installments with interest at 5% starting after 6 months. Very good. The profits are shared in the ratio 9 is to 4 is to 3. Ram died on 30th of September. Oh my god. Yeah. His capital is 21,600. Okay, we ignore capital of Lakshman and Bharat. Only 21,600. Current account 1,920. 21,600 credit, 1,920 debit. 21,600 credit, 1,920 debit. Done. Then let's give him a share of goodwill. So fat we should compute goodwill. 17,400 plus 56,320 plus 48,160 plus 17,408. Divide it by 4, multiply it by 3. I have done it here. Yeah. Add everything, divide it by 4, multiply it by 3. You get 1,44,216. This is the entire goodwill of the firm. Now we should compute Ram's share. Ram's share is 9 in the 9 is to 4 is to 3 ratio. So 12 plus 4, 16. So 9 by 16 if I do, 81,122. 81,122 is Ram's share in the goodwill of the firm, which you should receive from Lakshman and Bharat. Doesn't matter who pays, they pay it in the gain ratio that they have. So much is capital will increase. I've given 81,222 credit, 81,122 credit. So 21,600 plus 81,122 minus 1,920 is 1,802 rupees. What has to be paid to Ram's executor? So right here 1,802. This has to be paid in 4 equal installments. So I divide it by 4. I arrive at 25,200. So in each installment, I'm supposed to pay 25,250 paisa. So 4 installments, 50, 50, 50 together. I'll add it up and then pay the 2 rupees in the last installment because I don't want to do that 50 paisa adjustment every installment. Okay. So 25,200 is the amount principal. Along with that, I should compute interest. So they died on what date? Ram died on 30th of September. We'll start paying after 6 months. So 30th of September after 6 months comes to 31st of March. I compute interest 25,220 on this 1,802 at 5%. So I end up paying 25,200 this part plus 2,520 interest, which comes to 27,720. Balance will be 75,602. I bring it forward on 1st of April. Now another 6 months, that is 30th of September. I add interest of 1,890, that is on 75,602. I pay 25,200, 1/4 of the amount plus 1,890 interest, which comes to 27,090. The balance will be 50,402, which I bring it forward to 1st of October. I add interest at 5% for 6 months. Then I pay 25,200, 1/4 of the amount plus this 1,260, total being 26,460. Balance will be 25,202. This will be paid in the next year. 25,202. Again 6 months interest, 630. I pay 25,832. You might say, sir, 25,200 plus 630, you should get 25,830. 50 paisa shortage year payment. 50 paisa shortage year. 1 rupee. Another 50 paisa shortage. 1 rupee 50 paisa. Together I paid here 2 rupees. You guys get that? If you want, you can write here 0.5, 0.5, 0.5, 0.5. Instead, I prefer to pay those 2 rupees in the last piece. I hope you guys don't have a trouble with this. Very easy question on death. Not at all difficult. What would have been tricky? What is it that might have troubled you is this ledger. Ram's executor. Payment after every 6 months. Yeah, this is the only tricky part. But not impossible. We've done a similar question in class. If you would have attended regular class or gone through any of the revisions or gone through the material, you wouldn't have found this part difficult at all. Yeah. Yes. However, this was not a choice question. Let's go to the last question, sixth one. Yep. This was a question on company accounts, issue of shares. So they invited for 75,000 applications of rupees 10 each at 5 rupees premium. So issue price is 15. So amount was payable as follows: 9 rupees per share, that is including premium of 5. So 4 rupees towards nominal value, 5 rupees towards premium on application and allotment. So on first and final call will be 10 minus 4, 6 rupees on first and final call. So that was with the question. You received 3 lakh equity shares applications. So this is over subscription. They are rejected 2 lakh applications. and balance 1 lakh applicants were given pro rata allotment. So 1 lakh applicants got 75,000 shares. So 25,000 into 5 worth of calls in advance will be there. So then what would happen? One person by name Raj failed to pay the final call money. We forfeited it and then reissued it at discount of 4 rupees. You need to pass journal entry. Simple question. Let me show it to you. Come on. Firstly, bank account debit to share application. Received share application money. 3 lakh applications into 9 rupees. 2 lakhs, 27 lakh rupees. Now this share application has to be transferred to capital. So I'll write share application 27 lakh. But what will be transferred to capital is number of applications called for. It was called for only 75,000. So number of shares that will be allotted is 75,000. So I'll do 75,000 into 4. You get that? Now against this 75,000 into 4, you collected premium of 5 per share. 75,000 into 5. Now you received 3 lakh applications, out of which 2 lakh are rejected. You refund that money, 2 lakh into 9, 18 lakh. Out of 3 lakh, when you reject 2 lakh, 1 lakh applications are remaining. Out of this 1 lakh, 75,000 applications are accepted. Balance 25,000 into 9 rupees, whatever is collected will remain in calls in advance. Done. So a share is of rupees 10. Yeah, you are collecting 9 rupees on application along with 5 rupees premium. So 9 minus 5, 4 rupees is towards share capital. So 4 is collected, balance 6 is share call. So share call will do 75,000 into 6, 75,000 into 6, you end up getting 4,50,000. Yes. Then what do we do? Then we receive money, bank account debit. Now this, how do we get it? You need to do this working note first. There is a person by name Mr. Raj. He did not pay call money. This guy had 1,500 applications. He had applied for 1,500. Firstly, we need to compute how many shares were allotted to him. How do I do this? By cross multiplication. For 3 lakh applications, 2 lakh were rejected. 1 lakh applicants got 75,000 shares. So 1,500 shares is what he applied for. He might have received 125. How did I do this? 1,500 into 75 divided by 1 lakh. So if it is this much for this much, how much for this much? Itne mein itna to itne mein kitna. So cross multiplication if I do, I'll receive 120,000, 125. 1,125 into 6 is what he should pay for call. However, he has got 1,125 shares of 1,500. So 375 shares he had applied excess, against which he might have paid 9, which would have been in calls in advance. So 375 into 9 is already paid. 1,125 into 6 was what supposed to be paid. So difference of 3,375 is calls in arrears. I've written that 3,375 is calls in arrears. And calls in advance from here, 2,25,000 end up coming here. And then you write share call account 4,50,000 from here. Balancing figure will be your bank account. You get that? Then what happened? These shares were forfeited. So we'll write share capital to calls in arrears to share forfeiture. 1,125 shares into 10 here. And then calls in arrears, whatever you have debited here, 1,375, you write that. Balancing figure goes to share forfeiture account. Then you reissued them at discount of 4. So issue price is 6. So 6 into 1,125, you get 6,750. And then 6 into 10 into 1,125 comes to 11,250. Difference, that is discount on reissue of forfeited shares, will be debited to share forfeiture account. Share forfeiture account was initially created by 7,875. Now debited by 4,500. Difference will be transferred to capital reserve because excess money remaining in share forfeiture account is capital profit to be transferred to capital reserve. I transfer 3,375. That's it. That brings us to the last question in our paper, 6b, which is what are the advantages of subsidiary books. Second chapter, accounting process. When I cover the theory, I exhaustively cover this part as well. It will lead to division of labor because that work gets divided. For some people, efficiency will increase. They become specialized in it, and it will save time because multiple books can be ran multiply. You don't have to wait for one book to be completed to start another, and information will be available very easily. You don't have to run through multiple books. Sales are here, purchase are here, and errors can be very easily identified. These are the advantages of subsidiary books. And by this, I call it an end for our paper discussion with regard to CA Foundation Principles and Practice of Accounting. I hope it was of some help to you people. I wholeheartedly pray for your success in the CA Foundation examinations. I hope you guys don't have to write the CA Foundation examination again or don't have to see any videos or any books of CA Foundation again, except if you choose to teach. Yeah, so I can't give you gold, but I'll definitely include you in my prayers to ensure that you come out with flying colors and hoping to see you all soon in CA intermediate batch. I am CA Rajavardhan signing off. Please do like, share and subscribe this particular YouTube channel for lot of updates and lot of informative videos on this type. That's it. Tata, bye bye. Take care. And it's time for me to go to bed as well. It's 2. Yeah. Good night, guys.